Interest rates are a problem. But the biggest problem and affordability right now is the fact that we don't have enough houses on the market. We still need a ton more houses on the market. The interest rates is definitely a problem, because it creates a situation to where the money that you borrow, you're paying more to pay it back. But you have to borrow so much more money nowadays because the lack of supply to meet the demand for housing, there's more buyers than there are sellers, is driving the prices up. And not only is it driving the prices up, as a result of the prices being higher, the taxes and the insurances are higher too. You are insuring the loan, not in mortgage insurance per se, but if the house was to have a disaster, for it to be replaced, it will cost more for it to be replaced. So therefore, you have to have more insurance. On the tax side, the way taxes are calculated is based on the value of the area times the millage rate of the area. So therefore, if the value is higher, then you're going to pay more in taxes as well. And all of that is hitting your pocket. So the loan, you borrow more money because the house costs more. Because the house costs more, it's going to cost more to insure. And because it costs more, the taxes are going to be higher. All at the same time. And all of that is because, and that's on top of the interest rates that are higher. So you're paying more to pay off the loan too. But three of those things are based on the fact that we don't have enough houses for people to buy. It's almost like reverse competition, like you're always in competition with the next buyer, right? I like to say, it's not you versus the seller, it's you versus other buyers. There's so many other buyers that is forcing the prices up, right? The seller may be happy. Of course the seller wants to take as much as they can get, but they may have been happy $30,000 ago. But because there's so much competition to the buyer, then it's going to go up that high. And the seller's going to take the best one. You would too, right? But if there was more houses on the market, then there's not so many buyers per that one house, which means now, that house doesn't go up as high. When you reverse it and you have more houses than you have buyers, that's what's called a buyer's market. We saw that some years ago, and it's the buyers with the upper hand. It's the buyer saying, well, I'll offer you this. And the seller is like, oh my God, that's the best I can get. So it works both ways, but we've been in a seller market here in this area for quite some time, 10 plus years. So yeah, the interest rates are a problem. Hopefully they come down some. We won't see like we saw a few years ago where we're talking about 2%, 3%, even 4%. I think we can get into the fives possibly, but sixes are here to stay. Maybe fives, but sixes for a little bit of time. And to be honest, that's not very unnormal. Is unnormal a word? It's not unusual, maybe I should say. But what is unusual is this level of low inventory. We've been facing low inventory for some time, but we are at its lowest. Hopefully it's the bottom and we can start bouncing back up.